Okay, good afternoon, everyone. Thank you so much for taking the time. I always start with this because I know how valuable your Thursday afternoon is in the middle of the day, depending on where you're calling in from, what part of the country, what time zone. So we appreciate every minute spent with us. And the goal, like always, is that you walk away with nuggets to help change your practice for the better, right? Because if you write down notes, if you use that Q&A box, and after an hour you say to yourself, "Oh my gosh, I just learned something new," and you start marketing a new concept or a strategy, and you get a sale out of it, or it changes the year. Okay, it's a win-win, and it's time well spent. So that is the goal. We literally huddle up with our entire marketing team every single Monday morning and discuss this week's webinar. So we want to make sure it's valuable. That's number one for our agents. And obviously, it's a win win, right? If we come up with these great ideas and carriers and tools and technology, and you go out and make more sales, right? We all win. That's how we get paid, is when you write an application. And that's how the carriers get paid. So, again, it's a win win win. What we're doing today is we're going to talk about a new strategy, a new way to open doors, a new story to tell. And you've heard obviously about mortgage protection for years and years. In fact, I started in the business, 20, almost 26 years ago, more than half my life. And I remember the first product that I was marketing to agents was mortgage protection, non med life insurance, right? And I mean, that's 25, 26 years ago. And here we are today, right? And obviously, we're not talking about mortgage protection, but we're talking about a strategy built around the concept. So mortgage protection leads are still hot. Mortgage protection products with living benefits now are hotter than ever. We all know what happened to the real estate market, right? Mortgage rates were at a low, now they're at a high. The industry in general has changed quite a bit, but the bottom line is people are buying homes, refinancing, and we need to get the word out, right? And the biggest misconception out there is, oh, I need to buy mortgage protection insurance, and the consumers have no idea that's just a term life policy. That's no exam or simplified issue, right? So it's your job to go out, tell the story, talk about living benefits, right? And why these are so important. And then you bring up products that are the ultimate one-stop shop solution for these consumers. So anyway, let's shift gears. What I want to do today, we're going to have our question of the day at the end, so make sure you're paying attention. We're also going to talk about some great social media ideas. We're going to show you real live posts from life insurance agents and carriers that are performing great out there today. And I always say you don't have to reinvent the wheel, you just change a few spokes. So if you can get a few ideas from these ads and start using it today, this afternoon, right? Co-brand it with your logo, get it out. It's going to be a win, because if you get one like, one comment leads to one sale, it's one sale you didn't have, right? Or one sale you didn't have before we started here at 3 p.m. Eastern Time. So write down notes, ideas, take pictures with your phone, screenshots, all the above. The carrier that we are featuring today is A plus rated Lafayette Life, and they are our go-to company, right, for traditional whole life. They have some great term solutions, this great new strategy we're going to talk about. They're scholarship approved. And we see, I would say, probably the biggest uptick in the last 12 to 18 months is agents that were maybe career agents from the Penn side, from the Guardian side, from Mass Mutual side, and they want a great whole life product, right, that performs outstanding, and they want to get paid for the effort, right? And average, just keep this in mind, this product pays about 20 to 40% higher first year agent comp than a typical career type of whole life product. So that's where we're seeing the biggest uptick for Lafayette Life and whole life sales. Also, Mary Reed, right? She has an awesome strategy that we've been talking about. In fact, she was our keynote speaker at the expo last year. Her distribution solutions book, in fact, she's authored now 4 or 5 books, but her concept for retirement planning, for tax saving strategies, works perfect with Lafayette Life. In fact, that's the one carrier that she picked for the consumers on the more conservative side that are geared more towards whole life. So when you think about that, she is an expert, a veteran in the space, okay? And she literally narrowed it down and handpicked 2 carriers. Out of all the companies out there, she picked 2, and Lafayette Life is one. Okay, so that tells you something. They have some great new bullet strategies, tech tools, non med underwriting limits have been raised. This is a great story, and I think you're going to love everything you're about to hear. So, Terry's going to come on in just a few more minutes, and he's going to run for about 35 minutes. He's going to talk about this new strategy, and then he's going to talk about all the reasons why you should be using Lafayette Life with Levinson in the future, okay, and moving forward. So let's keep going. Andrew's at the wheel, so if you want to type away with questions as we go, please do, and he'll answer every single person. And then, of course, like I said at the end, make sure you answer our question of the day first and correctly, and you win your choice: Amazon gift card, Apple AirPods, or I have the new Fire 10 tablet, the new Amazon Fire 10. Okay, so make sure that you stay on until the end. All right, this is interesting. Real fast, this is a survey that was done, and then trends that NALBA and LIMRA, okay, as one team, what they're seeing and feeling for the new year, okay, for 23, based on statistics from 22 and 21. So, real fast, let's focus on the top section. Continued record sales of both protection focused products and accumulation products driven by the stock market, as well as 7702 rules, which allow for higher non-MEC premium limits. Now, this talks about permanent products, IUL, UL, whole life, okay? Just under that number 2, increased popularity of chronic care and long-term care riders. Okay, so we spoke about that just a couple minutes ago. Living benefits, right? We know that story, the new kind of life insurance that pays while you're alive. Well, you have to get the message out. Although advisors are meeting with clients in person again, virtual meetings still continue to be more common, and more meetings equal more sales. The point is, you got to get comfortable with Zoom, with GoToWebinar, and again, you got to have your 3 main social media pages up and running. What are those, Bill? Facebook, LinkedIn, and Instagram. Okay, you got to cater to all over, literally all over the country in all different demographics. Instagram, you're going to hit the younger generation. Facebook is more middle age to upper age. LinkedIn is professionals. Okay, and also I would play with Twitter a little bit, but those are the 3 main pages you need to have a page on. You need to have exposure. You need to have your name out there. COVID still looms as a major factor. In addition to its impact on underwriting, 30% of consumers said they were more likely to buy life insurance because of concerns about the virus, right? That's still going up. The awareness is skyrocketed. What also this has caused, and just think about this, the younger generation now, young families, young professionals, people even in their 20s and 30s now are thinking, oh my gosh, I need life insurance, right? Because they're thinking about, their cousin Johnny, who lives 4 blocks away, who was 37 years old, right, was hospitalized with COVID and almost passed because of it. Or their auntie Christy, right, who is 62 years old, that was hospitalized and never made it out of the hospital. So awareness is skyrocketing. Again, you got to get the word out. Sales of life insurance were up 5% last year, and premium amounts increased by over 20%. These are facts. That's insane. Okay. And what it also tells you is you're in the right place as a career move, right? There's no better option. The sky is the limit with life insurance and annuities. Okay. Especially with annuities lately. You know what's going on over there, right? So you got to run with this. It's time to get scrappy. Okay, and the way I think about Scrappy is it's like a lion out in the jungle, trying to chase their meal for dinner, right? Whatever animal that is, right? They're going to stop at nothing, literally blood hanging down from their mouth. They stop at nothing. They'll stay up till 3 4 a.m. just to get the sale or the prey or the meal. You have to look at it like this because the sky is the limit. The opportunity is here right now. Okay. In fact, that's how we all are in this office here at Levinson. We have to get scrappy. Every app counts. It doesn't matter if it's $7 a month or 17,000 a month. Okay. It's an app and we fight for the app. That's it. Bottom line. Second to the last, according to the latest LIMRA study, 59% of non-insurance owners, which is 73 million people, say they need it. They need life insurance. 22% of current policy owners say they need more coverage. Again, the opportunity is there. The proof is in the pudding. And then again, I just touched on this. Guaranteed fixed annuity rates will continue to remain higher than they have in many years, advancing continued increased sales of these products. Okay. MIGAs, awesome, on fire. Indexed annuities, great place, right? Underwriting is basically non existent, right? We just have to go through financials, make sure everything's compliant. Typically, you send an annuity in, you're paid within a week. I mean, it's unbelievable. Commissions could be 6, 7, 8%, depending on the product. That is a great way to supplement your income. There's never been a better time. Let's keep moving along. Okay, we have our New Year's kickoff sales contest that is almost over. So we want to make sure you get in your 3 apps. Could be 3 annuities, 3 life. It could be a mixture. Doesn't matter. You write your 3 apps and you get a lead batch. 1,000 mailers free on us. Okay, till the end of January. So you got a few days left to get your apps in. We have a coupon we're going to include in our thank you email. The expo is back, bigger than ever, April 21st. Okay, just 3 months away now. Make sure you RSVP. Okay, we have a room and it will only hold 300 agents. And I'm just telling you right now, we're getting close. So make sure you RSVP. It's free for all active agents. Of course, we have breakfast, snacks, lunch, and it doesn't even matter if you've never written an app before. We want to see you there. Now, if you're an active agent writing business, okay, and look in the top right corner, make sure you have until March 31st to get your place premium in to stay one night at our beachfront resort, right? At 50,000, we do round trip airfare, 1 free night, 60,000, 2 nights. So a whole weekend stay plus round trip airfare on us. Even if you're coming from Hawaii, which we have agents there, we will pay for everything. Okay, and it doesn't matter. You can mix and match life and annuity premium, but most important, RSVP today. As soon as we hang up, Andrew will include a link and the thank you email. But once we hit 300, we are capped out mainly because of COVID. They will not let us have literally 302. So you got to get the RSVP in. Okay, what's new at Levinson real fast? And then I'm going to talk about some new products that we literally just got approval on. Very exciting. Very important here. What's new at Levinson? We have to keep pushing the envelope every day, every week, every month, every year, right? With new tools, tech, things are changing, and we have to be out front. And that's the way you need to look at your business. So real fast, these are the latest carrier incentives, right? There's a chance to make some extra bucks, mainly on IUL sales with your first Insure Me Now direct cases. Let's move over to the middle, and we're going to include this also in the thank you email. Middle section, we have some updates coming to the Insure Me Now direct platform. IUL, right now, I'm just going to say one carrier name, Allianz, between their underwriting bump up program, right, their guaranteed bucket interest rate, and what's going on with their participation rates and current interest rates, they cannot be beat. I'll tell you right now, that product is off to the races, and we don't know how long it's going to last until they make changes. But I mean, standard, right? Standard non-tobacco gets preferred. Table 2 gets just standard. Tobacco clients now get preferred tobacco. It's unbelievable what they're doing. It's almost too good to be true. That's why I'm saying we don't know how long it's going to last. So make sure you take a look at an IUL illustration with Allianz before you do anything else. When you're writing IUL, that is the go-to. We have a upcoming webinar with AIG and Corebridge. Okay, Corebridge is the new name, as you know. They just raised lifetime income payouts on their annuity products. We're going to talk about that in February's webinar, so keep your eyes peeled for that. Our new products on Insure Me Now Direct, we'll talk about in a minute. We have our local South Florida breakfast training down here in fact, it's in Boca Raton. We're going to have one of our top carriers there going over new sales strategies. Make sure you RSVP for that if you are local. Carrie's Corner Volume 25 out now. And then, of course, Bill Levinson Experience Podcast. The latest episode 43 was awesome. And the reason why we took 80 minutes and we went over everything from A to Z that Levinson offers its agents, most of it complimentary. Okay, but this is well worth your time if you're walking the dog at night, doing your beach yoga in the morning, taking your walk after dinner, whatever the case is. Put in your earbuds. I don't care if they're old school earpods, headphones, whatever. Make sure you're listening to the podcast, and you will take away some great ideas and nuggets, okay, or things that we have that you had no idea about that you can leverage in 2023. Okay, I'm telling you, it's well worth it. All right. Latest Insure Me Now Direct edition. This is going to be amazing. And the reason why is, Insure Me Now Direct, right, is our direct to consumer agent platform built for agents. We don't go direct to consumer. It is the only multi-carrier, multi-product solution where agents get full commission and you're agent of record. Okay, that means you build and control your own book of business. I'm hearing these stories, and I'm not going to mention names, but some of these new tech startup companies, they're telling agents out there, send us your clients. We'll send you a referral fee, right? And it's basically the same thing. It's not the same thing because a year later, when someone else in a call center called your client and sold them a newer, better, cheaper product, and you had no idea about it, not only did you lose a client, you lost a commission, and who knows what they sold your client in the first place. So if you're not agent of record, you don't want to get involved. Ask the question. So anyway, Insure Me Now Direct, you are agent of record. We now have over 5 carriers, over 22 products. These are our latest products we are adding to the platform. We have another instant decision, $1 million term. We have a disability policy, critical illness, an AD&D policy. And here's what's so cool. No one is declined. Okay, what does that mean? If your consumer is not healthy, 400 pounds overweight, 17 different medications, whatever the case is, and they apply for the $1 million term at 4 a.m. when you're sleeping and they get a declination, they're going to get an approval for the accident plan up to $350,000 with full return of premium built in. Okay, so there's an alternative there. Okay, a way to save the case without you doing anything. Okay, and these all have the ROP option. Okay, this is a big deal. This is 100% direct to consumer, all on Insure Me Now Direct by an A-rated company. We are so excited about these 4 new products and new carrier, quite frankly. So you're going to love what's to come. We're also going to have a hard launch at our expo. It's going to be amazing. So anyway, that's right around the corner now. Okay, our last slide, and then Terry's going to take the wheel. I know I'm talking a lot, which I tend to do, and I don't do it on purpose. I get a little excited about this stuff. This is my life, as you know, and we have to bring value to the table. And then obviously our agents are happy, right business. Again, win, 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 win across the board. These are our go-to whole life carriers. Okay. What you're going to notice here, right? We have all, in my opinion, the best carriers and products for every product niche. So top left corner is Lafayette Life, right? That is our featured presentation of the day. Terry is our VP with Lafayette. What you're going to notice real fast is 2 stars next to the name. What does that mean? Scholarship approved. So everyone that buys a product gets a free scholarship through Sage in blue. The YFB system, your family bank, they are an approved carrier with YFB. That's another big plus, and that's a program available through Levinson. Okay, so again, these are the other core companies that we have. Lafayette being our go-to. It's a excellent company, and Terry's going to tell you why, and he's going to talk about all of the bullets and all of the reasons why you need to think Lafayette in 23. Terry Cook, are you there, my friend?
Yes, sir. I am here. I am here.
Okay, good stuff. Thank you for that. Let's switch control here. I think we are good.
Okay, are we ready?
Yep, we are ready, Terry.
Okay, thank you so much, Bill, for that. I love your excitement, and thank you much for that introduction, and also for all of you that are on the line, a big thanks. Happy New Year. A big thank you for what you do. I've been in the business forever. Started when I was 21, and what you do is change lives. And every time you go out, and whether it's $7, like Bill said, or 17,000, you help people and their families. So thank you so much. Let's see. Get a page here.
Okay, just
Okay, here we go.
Yep.
Okay, just a quick Lafayette Life. We're the whole life carrier Western Southern Group out of Cincinnati. I think most of you have heard about us. We enjoy high ratings, A plus 96 Comdex, which a lot of people are looking for. We think multi-generational. We're very, very conservative, and you're going to be touching people's lives, that 50, 60 years down the road. We have 6 whole life products. They're all really competitive. We came out of 7702 being extremely competitive. So let's hop into this real quick here, and why the mortgage acceleration. There's different names for it. Some people call it mortgage acceleration, some call it mortgage freedom cancellation. We really don't care, but it's a way for people to pay their home off early. And today, there's not a better time where you can try and teach people how to get out from underneath that mortgage. And with interest rates rising, I mean, who wants to go out to their mailbox every day or every month and pick up a mortgage statement? And I've been blessed to be able to pay a couple of homes off, and if you can help people really pay your home off early, that's a real blessing for them. I always tell people, don't stop doing what you're doing right now. What's working for you? This is an add-on. A lot of people are in the mortgage protection market. Keep on doing that. We have a lot of people that do mortgage protection and then pivot over to the mortgage freedom, and it turns out to be a lot better for the client and also a lot better for the advisor. I take a look at the mortgage as the portal or the doorway into the greatest wealth in the history of man. When you think of everyone that has mortgages in the United States today, there's millions and millions. Even with the high interest rates, there's people are still buying homes. And so once you get inside that door, maybe on a mortgage protection lead, you're part of the greatest wealth in the history of mankind there. So and this works, by the way, and we'll get into this, with people that are doing mortgage protection, as well as people that are not doing mortgage protection. I mean, it's a great door opener to almost anyone that you have. Hey, can I do a mortgage analysis for you? Hey, I know interest rates are high, and we'll get into that here in a couple of slides. But there's millions and millions of people that have mortgages. You don't have to just do new mortgages. You can go through your book of business, and there are a lot of opportunities to talk to people about how to pay their home off early, and really the best way to pay their home off early. And we'll get into the math on this here in a few minutes. Usually mortgage people have better credit, so we have an accelerated underwriting program. Our accelerated underwriting program takes 2 days, and so a lot of the people that have a mortgage are just, they have a better chance, and the percentage is a lot higher for our accelerated underwriting program. We do have a conversion program with clients that may have bought term. I'll make sure that you have a brochure on that, but don't ignore the term market. And it's also a way for you to go back to your clients that maybe some of your clients had some term within the past 2, 3, 4, 5 years. And it's a way to, move them from the term market and start a conversation with them. And we do a term to perm conversion, and we'll get into that. We've already talked about who doesn't want to live mortgage free. It's a highly emotional sale. I mean, people will listen to you. We have found out, we've been doing this market for quite a while, and we found out that the best way to do this is to sell the analysis. Don't get into the weeds. Hey, can I do an analysis for you? Can I do an analysis for you on your mortgage? And it's complimentary. It'll show you how to pay your home off earlier. And in the end, it's about the math, and we'll get into that. But this is the best way to pay your home off when you take into consideration all of the different benefits that we have. So let's just get in on how it works. What we're doing here, let's say you have a prospect and they've given you a dollar amount. Let's just take $5 amount as the example we're going to use today. And that's usually what we're doing when we do a offer to do a mortgage analysis for the client is, can I use the dollar amount that you'd feel comfortable with? And you're doing it kind of in a demonstration mode. Can I run an analysis for you? But try and get some type of a dollar amount. A lot of people's car payments are, $500 or more a month. It doesn't really matter if it's $100 a month, but what you'll want to do is get that amount that you have from the client, and then using our illustration system, be able to run an illustration, and then we have this analysis that is really solid. And I'm going to show that to you today. That will not only do an analysis of their mortgage, but then show you year by year where the cash is and when you can pay your home off. And when the mortgage amount equals the cash value in the product, what we're going to do is we're going to take a loan on the policy, pay the home off, pay the mortgage off, and then usually we can adjust the amount of the face amount. And where we're a little different than a lot of companies is that when people pay their home off, that's where they begin to create wealth, because what you're doing when you're having a home is you're paying all of that interest to other people. And so I think that if you do this mortgage analysis, you'll see that in the first year, like 70-80% of your payments going to interest. And interest represents wealth transfer, where you're transferring your wealth to someone else. And so we'll get into this analysis here. But once the home is paid off, then what we want to do is to take that mortgage payment that they were paying to the mortgage company and then put that back into the policy for the remaining time of their mortgage. And people say, well, why do I want to do that? Well, that's really the best place to put it. A whole life policy gets much more efficient the longer you have it, and there's some tax advantages. And so once we have that home paid off, they don't have to do it; it's not required. But then what we do is to put that back into the policy. Real quick, I think your family bank, Americans are spending about $600,000 of interest over their lifetime, according to AARP. And just think about that for a minute. And that's not husband and wife combined, that's per person. And the biggest part of that is your mortgage. And and when we pay interest, it really represents two things when we pay interest to other people. Obviously it's a transfer of wealth. We're transferring our wealth to the banks or the mortgage companies, but we're also losing the pleasure of what that money could have bought. And the average mortgage in today's market people are going to be paying $300,000 of interest on their mortgage. And what we want to do is to be able to cut back on that. I don't think any of us can get through this life without paying any interest. But what we want to do is to try and get back and put that interest, that wealth that we're transferring to other people, and keep that for ourselves. And that's one of the reasons we're putting that back into policy. So 30 to 40%, this is astounding. 30 to 40% of Americans' household is going towards interest, on their credit cards, their mortgages, and we're going to teach people how to get out from underneath that. And then, like Bill mentioned, a gigantic monumental threat awaits every American, and that is when you get to be age 65, you're going to be facing the threat of long-term care, home health care, and the best time, the very best time to plan for that is now. The worst time to plan for it is age 65. And when you do this, if you get a person at age 35, we'll go to the analysis and show you this, you'll see that they're not only have the death benefit to pay their mortgage off, they'll not only have an emergency fund and the cash value if they need cash along the way, but if they need long-term care, home health care in the future, this comes along with that as well. This is just some helpful hints. I'll give this, make sure that Levinson and Associates has this. I always like to tell people, hey, this is what I'm seeing that's working. I'm in a lot of offices every week, every year, and the way to present this mortgage is, hey, we do a complimentary mortgage freedom report, mortgage analysis. This is part of our service. If you happen to be doing mortgage protection, hey, by the way, can I do a mortgage analysis on you? Can I show you how to save many years, maybe hundreds of thousands of dollars on your mortgage? We also offer a mortgage analysis. Can I show you an example? I'd always carry an example with you. Can I show you the absolute best way to pay your mortgage off early? And a lot of times, sometimes I get the question, that Dave Ramsey's out there, which, he's a good man. And his philosophy is to just make extra mortgage payments. And that's not a bad way to do it. But when you think about all the benefits that you'll miss out on, like an emergency fund, like the living benefits, I mean, what good does it do you to pay your home off, in 15 or 20 years, and then at age 65 or whenever to face the threat of having to pay out $300,000, $400,000, $500,000, $600,000 in long-term care? And so these are just some helpful hints. Again, you don't have to be a mortgage protection agent to use this. Some of them have videos. Bill mentioned, YouTube and some of the social medias. Why not do a video, or why not do on some of your social media on how this program works? Let's look at the mortgage analysis. This is going to be where the fun starts here. Okay, here we go. So this is kind of the finished product. There will be some more training here, but this is what the finished product this is what our mortgage acceleration looks like. This hooks up to our software program. And so like I mentioned earlier, you run an illustration at 400, 500. And interesting, when you do this and you get people excited about paying their mortgage off, one of the things that we see is all of a sudden the clients want to put in more money. They get really excited. And so when you show them a 500, a very, very common question is, well, what happens if I put in $1,000 a month? Or what happens if I pay $2,000 a month? We've even had $2,000 a month cases here and $3,000 a month cases, because they get really excited about being able to do this. And so that's a good problem to have. So you run the illustration at $500 a month. Let's go down to, I'm going to go down to page 4 here. And in the mortgage acceleration, which is in our advanced tabs on our software, The software is going to ask you to put in the mortgage amount, the mortgage interest rate, and how long they have they have left on their mortgage, and obviously you're already going to have their age. But this acceleration, this page right here, is just an analysis on their mortgages, and is really good to show the client. This happens to be, I think, a $400,000 mortgage. But take a look, if you would, in this table, in this column right here, where it says the sum of remaining payments. This is a $400,000 mortgage, and in year one, they have $747,000 of payments remaining on a $400,000 mortgage. Just think about that, and it's powerful when you can show clients, you know, if they pay that full 30 years, 360 months, this is how much they're going to have left, and which is, you know, that's a lot of money. And like I said, when we pay interest to others, it represents a transfer of our wealth. And it also represents money that we could have used, you know, to help our families invested, you know, whatever we want to do. This $500 a month at age 35 to 36 right here at $400,000 mortgage, I think the interest rate was 6%. And so we this automatically calculated it here. But if you look down again at that second to the last column there, the sum of remortgage payments, by putting this $500 a month away, and this is a standard, we were able to pay that home off anywhere between the 21st and the 22nd year. So we were able to save them $231,000 of payments. 230, because that's what they would have had you not come along. So really, really interesting to show people this analysis. People like to see it. And so let's move on from this page where it now shows the how it works. This is a graph that shows that payment right there, that principal payment that we took out of your policy, and then your mortgage balance goes down to zero. This right here is really, in my opinion, the meat and potatoes of a mortgage analysis. And if you see the left side of this illustration here, we ran a Patriot, you know, it's our whole life product right here. $500 a month. We put a term rider on there to make sure that we had the death benefit of $400,000, and we can do some training on that. But when you take a look down here at the 21st and the 22nd year, we took money out of the policy and we paid that mortgage off. And you can see that starting in the 23rd year, they no longer owe any amount on their mortgage. And then if you take a look at this column right over here, the annual policy, what we're doing here, because again, when you have your home paid off, and your goal to working with your clients is you're helping them create wealth, and you help them create wealth, number one, by not paying interest to others, and number two, by putting the money into the best possible place that you can put it into. And so in this case, we're putting $18,000 back into their policy. And if we go down to the next page here, you'll see at age 65, this person was a 35 years. So after 30 years, their policy has $233,000 of cash. Okay, $233,000 of cash for you coming around and helping people learn how to pay their mortgage off early. And as opposed to had they just paid their mortgage, they would have had zero cash. And remember, we've been able to save them a lot of payments. And so what we do is redirect those payments. Now, you may notice that $18,000 isn't their whole mortgage amount. And one of the reasons that we put in $18,000 is that that's about the most that we can put without making this policy into a MEC. And so, but you can see here that, again, the cash value, because you've helped these people along, it has $233,000 of cash there. Now, Remember, along the way here, let me go back up to this other page, is you've had cash value. And what's the disadvantage of paying your extra money to the mortgage, like Dave Ramsey says? And I'm not trying to pick on Dave Ramsey, but if you use that method and you're giving that money to the bank every year or every month, and something happens, you don't have an emergency fund, because it's not likely that a bank will loan you money or give you money. And so we use the cash as an emergency fund, this death benefit of $400,000 in case they die. And then we have this $233,000 of cash at the end of their 30-year mortgage. But it gets better from here. It gets better from here, because now what I'm going to do is I'm going to, okay. This is the illustration. This is the illustration, and it's without the mortgage analysis. But I'm going to go to page 17 on this just to show you what it looks like, because the good doesn't stop just at the cash. It gets better and better and better and better, and I think you'll agree with me here. So this supplemental illustration right here shows what they'll have in living benefits. And our living benefits really are three different living benefits. There's a chronic illness. That's this column right here. That's two ADLs. The specific illness is a list of about, I think it's 12 illnesses, like certain kinds of cancer, heart, valve replacement, just different. And if they get one of those diseases, then they qualify for this amount of money. And then, of course, the terminal illness. But the first thing I want to point out to you is year one. Let's say that and this happens sometimes, but in year one, if you take a look at this column, the max sum right here, there's $56,000. Remember, they paid $500 a month, but if something were to happen to them, they would have $56,000 to them, even though they've only paid $6,000 into the policy. They would have, if they got into a car accident, they'd have this lump sum of money along the way, in addition to the cash value and then the specific illness. But what we're trying to do down here, now let's go down to age 65. And at age 65, there's $286,000 available for long-term care. $286,000, and there's still, if you were to use all of that, there's still a death benefit of $95,000. So you've not only helped them pay their mortgage off, you've not only created an emergency fund along the way, you've not only put $233,000 of cash in their pocket that they can use on a tax-advantaged basis. And we're not going to get into the tax benefits here, but there's a lot of advantages there too. But they also have this money available to them should they need any type of ADLs. Some states don't let us use long-term care, and we certainly don't want to advertise that. But it works on two ADLs in the specific illness and the chronic illness there. So that's the illustration, and also the mortgage analysis. Levinson and Associates will know how to work that. I would also, this is just a sample mortgage freedom report that I thought I would show right here. You can bring up your own. You can use the analysis. This is kind of taking a summary that someone sent me that shows. And this report will show you how to, take time off your mortgage, save $199,000. It shows what you're going to be able to do with a client, maybe in a little friendlier presentation here. And but it's, if you're in a presentation, let me just show you your analysis if you don't want to use the one from the home office. And then there's also a comparison page right here that shows your current outlook that you have, as opposed to your mortgage freedom report, or call it whatever you want, mortgage analysis on whatever you have. And to me, this is the beauty of whole life. There's guarantees there, there's living benefits there. People sometimes come to me and said, well, Terry, this whole life has a horrible rate of return. And I put in all this money and it shows a very low rate of return. And first of all, I always tell people that the money that you can use outside of your policy by having liquidity and access to your policy is much more important than what you earn inside your policy. And so right here, if you can take your money out of your whole life policy, you're literally saving $233,000, or what was it, $286,000 of interest. And so by having true guarantees and an analysis of what you're doing for your clients. And I'll stop there, Bill and Andrew, and answer any questions. I went over this fairly rapidly, but again, we've had a lot of success with this. My takeaways, if any of you are note takers, is just sell the analysis. Just sell the analysis. Don't try and just sell the analysis and get them to do an analysis for you and show it to them. And these reports will sell themselves. And once people see what they can save, it will absolutely sell itself. With that, Bill, I'll close. I probably yapped enough, and I hope I've gone within the period of time. But before I go, I want to say thank you again from the bottom of my heart of what you do. I'm a product of life insurance. Maybe down the road, I'll tell you what a blessing it's been in our lives. But if I can do anything to help, we have a home office. And I want to put in, just before I leave, that you're with a true jewel of a company in Levinson and Associates. I see these every day, and I'm not trying to suck up to Bill, but they do more. They give you more value added than other organizations, and you're truly lucky, blessed, fortunate to be with a great organization like Levin and Associates. And so I thank you for what you do, and thank you for your time.
Oh, Terry, thank you so much. We appreciate those last comments as well. And we feel the same about you guys and obviously our agents as well. We wouldn't be here without them. So kudos to everyone. Andrew, do we have any questions that we can answer with Terry, or did you get everything handled on your own?
Yep, I got most questions answered, but I'll just do one, Bill, real quick, because I have so many agents asking it, and that is just, what is the ideal age range for this? I'm assuming the younger active saver, but just if you can quickly comment on that, because we have about 5 questions like that.
Sure, it works. Younger is going to be better. Younger is going to be better. But we do this on 50-year-olds. The 50 is the new 30. But I would say 30s is, because they have longer, but it doesn't mean that it doesn't work in the 40s and 50s. We've even, done some, and again, savings is savings. And by the way, there are a lot of times that we do both. We'll do a policy and say, do the policy so we have the living benefits and the death benefit, but that won't stop you from making extra payments too. So you can do both. It doesn't stop you from doing both. But I would say 30s is a sweet spot, but we can do it in other ages as well.
Okay, beautiful. Thank you for that, Terry. Okay, all right. We got a few more things here. We have a great concept. We have some great products here with Lafayette. Especially by offering the scholarship. I mean, that is a huge value add, and it's a big leg up for you versus the other agents out there that are trying to all talk to the same bucket of clients, right? So you got to use these things to differentiate yourself out there. What I want to talk about now is we got to get the word out, right? You have a good concept, good product, good company, and it's your job now to get these doors open and share the story. You have to be known. I say this all the time. If you're in Florida, South Florida, if you're working in maybe 6 different states, you have to be known as the go-to, the insurance guru, right? When it comes to long-term care, whole life, term life, annuities, whatever it is, you have to be known as that person, that guy or girl. And the only way you can do that now, and it's free, by the way, is to get the word out with social media. And you have to have an idea, concepts. You have to get scrappy. Even Terry mentioned it with YouTube. There's no reason why you shouldn't have your own YouTube channel, your own podcast, and you can talk about these strategies, okay? Especially if you have the gift to gab and that personality everybody loves and people love to pinch your cheeks. Well, great. Get on a phone, a smartphone, okay? A camera. You can go buy at Best Buy for $29.99, and your spouse could hold it up tonight at the kitchen table. Talk about these things and get the word out little by little, okay? And it's free. So, how to get started. If you're already with Lafayette Life, and you want to say, hey, Bill, moving over to you guys, right? We will match or beat your grid, your commission grid. Plus, you get free leads or cash with your first paid app, and you get all the value add with scholarship and all the other bells and whistles. Okay, so everything is going to be in the thank you email. We also just show a quick little drawing there with the yellow arrow, and that's where you're going to start my contracting, and then cash for contracting on the bottom, and then we can get started. Let's move forward here. We have an entire library of marketing material that's also there at your fingertips. But what I want to talk about now are our exclusive lead program. So we have excellent pricing that we negotiated for you with these vendors. And it's such a big deal because, especially if you're buying in quantity, right, you're saving anywhere from 10 to 30% per batch. Okay. And the top one, real fast, is a non-med life insurance lead up to $1 million. So this could be mortgage protection. This could be life insurance with living benefits, whole life, IUL, all the above. It's all about no exam life insurance up to $1 million, leads generated on Facebook from Facebook ads. Okay, this is where we are seeing the best results hands down. And it's not uncommon to come across a $20,000-$30,000 case. Okay, that's 20-30 grand of annual premium. So they're out there. That is a great, great platform. Just under that, these are our mailer programs. So we have a combination of mortgage protection. We have financial services, annuities, all the above. These start at about $525 for every 1,000. All leads come back to you. So that's important. You control the leads that come in. It's your name, your address, your return address. So that's a big deal. And the two platforms we use, these are they and have been vetted by some of our top agents. And then here's another one. So the middle one there has the second chance leads. And these are great because think about this, okay? These mailers and hot leads that come in, how many agents call on them? Once, twice, maybe 3 times, 4 times, and that's it. Okay, the second chance leads are anywhere from 6 to 12 months old, and you're paying like $3-4 a lead. So it's a great way to open the door and share your story. These new homeowners, right? They just closed on the house. They move in on a Wednesday. By Thursday, there's 25 mortgage protection cards in their mailbox. Okay, so wouldn't it be great not to be in day one, but to be in 6 to 12 months after? Because the chances are high that you won't get a call if you're in day one. So you're paying all that money for nothing. So think about those second chance leads. And then what I also want to mention, let's keep moving forward here real fast. So, you have this big bucket, right? And you have to look at it like this. You have your bucket of consumers, right? Your book of business, your neighbors, friends, this big bucket, right, is sitting there. And you have to do a great job to drip on everybody in the bucket to say, hey, Bill, hey, Shelly, hey, Christy, right? It's Long-Term Care Wednesday, right? Did you ever think about long-term care expenses and who's going to pay for you when you need in-home health care or you're in a long-term care facility? Click here for a quote. Or, living benefits Tuesday. Did you ever think about critical illness? If you had heart attack, cancer, stroke, who's going to pay your bills, right? So you have to constantly drip out there. And what a lot of agents say to me is, Bill, I don't know what to say, right? Everybody's out there. They're doing the same thing. Give me some ideas. So what I did real fast is I went on Facebook and Instagram and I just did a search for mortgage protection, right? And then I did life insurance and I said, Give me the top results. Okay. So these are 4 examples. By the way, we're going to do this every week because I always say, and I said it earlier, don't reinvent the wheel, just change a few spokes, right? These are some great ideas. The top left one, let's start there. What is mortgage protection? Let's put it this way. If you were to suddenly become disabled, would you still be able to pay your mortgage? If the answer is no, we should talk. Link in bio. Okay. This is on an Instagram page. This is getting scrappy. Okay. The point is, everybody should click the link in bio because the answer is no. Okay. Now let's look at the top right hand corner. Remember, you can't get life insurance when you really need it. Okay. And then just under that is a quote link, which goes right to your website and it generates a hot lead. These are all just ways to get the name out. Examples, bottom left, saw this quote and it truly hits. You don't buy life insurance because you're going to die. You buy life insurance because your family is going to live. Message me today for more info. Okay. This is getting scrappy. Get the word. Even if you get one comment, it's okay. On the right side, okay, this is a company based out of the UK, Life Insurance Agency, right? All they did was they took testimonials, reviews from their customers, and then they showed a picture of their Life app. Okay, you can do this on your iPhone, by the way, for free and get the word out now, right? Hit everyone in that bucket. And it doesn't matter if it's someone that already bought a policy or a new lead or your cousin Harry, right, who lives 4 streets down the road. You have to be known as the go-to. So when it comes up at the supermarket tomorrow night when Shelly's buying veggies, your name comes up. Okay? It's that simple, literally. But you got to be aggressive. You got to get the word out. Let's keep moving along here. So you have this big bucket now, right, full of neighbors, friends, consumers, prospects, all the above, right? How do you organize all of this, right? How if somebody wants to make an appointment and speak about long-term care, mortgage acceleration, what's going to keep all of this organized for you? That's Ringy. That's where Ringy comes in. So all this does, right? Look at your big bucket again. All this does is send out notifications on behalf of you. Okay, Bill Levinson, the life insurance guru, right? Sends out a text, an email, a phone call to everybody in your bucket every week or every other week until they hit the calendar button to set appointment with Bill Levinson. And then my calendar is going to show up and they're going to pick Thursday, 1 p.m. And then I know Bill Levinson knows he better get on the phone with Shelly Smith because she's ready to talk about life insurance and it organizes your entire bucket for you. So if you want to get started with Ringy, they have a 2-week free trial, or if you're a Levinson agent, you pay $69.95 for the first 6 months. So that's a great price. Or just try it out. Okay, I know it works because we use this for our Facebook agent leads. All the agents that come to us. This is how we keep everything organized. No brainer. Okay, almost done here. I know I'm ranting. I just know how frustrating it could be to have this great product or strategy, but you have no one to talk to, no one to tell the story to, right? So these are different ways for you to get the word out. On the left hand side, this was our latest podcast, Everything You Need to Know About Working with Levinson. That's the 80-minute program I spoke about earlier. And then on the right hand side, this is a interview I did with the owner, founder of Your Family Bank, and we literally went back and forth for 1 hour. Okay, it is awesome. Great sales ideas. We're going to include this in today's thank you email so you'll have everything at your fingertips and no excuses. Okay, you got to learn and you got to walk away with nuggets. Start sharing this word, this strategy, get it out there. Okay, future trainings, which is what you're on right now. We spoke about Ringy in your bucket and how to organize all those consumers and neighbors and friends. So we're diving into our 2023 kickoff Ringy webinar training on the 2nd, February 2nd. Make sure you're on that webinar. We're going to have some great giveaways and we're going to walk you through this A to Z and show you exactly how it's done and how some of the top MDRT agents are using it. Okay, some are even on this call right now. And in fact, a few of them are going to be on the agent panel at the Levinson Expo. We're going to have a panel this year. So anyway, going to be really, really neat stuff. Last slide here is our Positive Tuesday quote, and then I'm going to do our giveaway right now. Okay, this is a great little quote here that I put out. This is my way, right, to keep Bill Levinson's word and company and brand and image out there to the masses. And I came up with this thing called Positive Tuesday, which means nothing. Okay, I just made this up, and I haven't missed a Tuesday in 4 to 5 years. Okay, everything seems easy when you are busy and impossible when you're lazy. Okay, keep the pedal to the metal. And we know how true that is, right? You got to grind. You got to get scrappy. Now it's more competitive than ever with other agents out there doing the same thing. Okay, but the difference is you have access to some of these exclusive tools and strategies. It gives you a leg up against your competition. Okay, if I'm selling a Lafayette Life whole life product and Andrew's selling the same whole life product, right, to the same exact client, everything is neck and neck. But maybe they like Andrew a little bit better than they like me. But the difference is I'm giving them a 1 year free scholarship for little Susie and little Johnny. Okay, same product, but $40,000 of value. Guess what? It doesn't matter how much more they like Andrew. I'm going to get the sale every time because of the value add. So the point is leverage these tools, differentiate yourself, get the word out. I know you could do this because we have some of our top agents are in our 30s and 40s. They don't even see clients face to face anymore. They're crushing it. These people are making $1 million, $2 million a year of commissions consistently, by the way, even before COVID. So I know it's out there. Okay, question of the day. Whoever answers first and correctly wins your choice: tablet, Apple AirPods, or Amazon gift card. Question of the day is, I spoke about the 3 top social media platforms you need to be active on and build a page. What were the name of those 3 social media platforms? You tell me and you win. You get your choice of those 3 prizes. You get to pick one of the 3. Andrew's going to tell us who answered first and correctly. Andrew?
Okay, the first correct answer is Robert S. Robert S.
Robert S. Congratulations. Facebook, LinkedIn, Instagram are the 3 top social media platforms for life insurance right now. I also would suggest Twitter as well as a 4th, but those 3 are definite 100% no-brainers. Throw in YouTube in there as well for number 5. Let's all have a great Thursday, a great week, great selling. We're here for you, and keep your eyes peeled for our thank you email that will be in your inbox tonight before we wrap up the day. Take care, and thanks again, everyone.